Hello, my YouTube family. Hope all is well. I know it's been a while since I gave an update on the interest rate, but I am happy that I'm here today to do just that. In the last video, I know we talked about that there were some dates that we were hoping that the feds would cut the interest rate. And we know that they did. If you haven't really been watching the news or haven't really been keeping update on what is happening, that is why I am here. So I did my research and I found some information in the Forbes newsletter, and it states that the 30-year mortgage rate is declining towards 6% after the Federal Reserve cut interest rate on September 18. So we know that interest rate has been in the high sixes and low sevens, high sixes. So we're happy that they are at least doing some form of reducing or reduction, I should say. So we can, buyers can look forward to that. And it states that that's down from the similar mortgage rate approaching 8% in November of 2023. So in 2023, around this time, the interest rate was about 8%, it says, which may have been a peak level for the cycle. It said the Fed doesn't control mortgage costs directly. So when it comes to mortgage interest rate, the Feds they're not the one that states what the interest rate that your lender will give you. But it's an indication that if they are reducing the interest rate on the higher level, then the lenders are taking cue from the Feds, praise God. So if they reduce their, if the federal government, I should say, reduce interest rate, then that will trickle down to your local lender that will start reducing rates to a much lower level than we have been seeing. And it says, but everything is based on the market expectation for interest rate to be lower. Everything depends on the market expectation for the future of what's happening when it comes to inflation, when it comes to unemployment and all that stuff. So, as I am doing more research, I am realizing that's why we have these economists that give their prediction of the future of what will happen. So that's why they're looking keenly on inflation. And we know that inflation rate is currently at 2.9, and they want to see that at least reduced to 2%. And if that's a good indication, praise God, from what's happening with them lowering the rate now, then it seems like it's a good indication that they may continue to reduce it, so we can get back hopefully to the 4% and the 5% interest rate that we saw a couple of years ago. So in the newsletter it says, but the market expectation that interest rates are moving lower together with cooling inflation have been significant factor in helping to bring down mortgage rates over the past 12 months. From here, it's possible rates will move lower. However, that will depend on what the Fed does compared to market expectation, as well as other economic factors such as inflation trend. So just as I said, they are looking at market factors as inflation, as unemployment, etc. So those are the indication that will give the Federal Reserve, the guidance or the information they will need to further lower interest rate. And that's what we want, because when they lower the rate, then of course, just as I had said, then you're borrowing borrowers like us, just the regular folks, then those institutions will also lower their interest rate, which will benefit us, the consumers. So that is what we are counting on, that the federal government will continue to lower the interest rate. That's what we are hoping for. And it says current 30-year mortgage rates reflect fixed income markets expectation about future Fed decision. So the recent decline in mortgage rates reflect the market's prediction that short-term interest rates are likely to decline. If that prediction proves inaccurate, then mortgage rates could move back up. So it could move back up based on those factors. If inflation, the inflation rate go up instead of coming down to that 2%, and the unemployment rate goes up, then there's a likely chance that they will increase interest rate again, praise God, because they're trying to find a balance in that. And we're hoping that, you know, it will stay on this downward trend, that they will continue to reduce the rate. So then those that are, you know, buyers that are still waiting for the interest rate to reduce to, you know, start buying, that they will have, you know, they will have a good indication that, you know what, it's time for me to purchase. So that is what we want. We want, you know, homes to be sold. We want the real estate market to come back as to what it was, because, you know, I'm in that market, so it affects me as well. So my desire is that interest rate continue to decrease, so then that will give me more clients, more people will be buying homes, and also it will be good for sellers as well, and homeowners that wants to refinance as well. So, you know, this interest rate plays a big part into the economy, because we are watching that, so we can know what to do when it comes to our real estate business, praise God, or our real estate needs in terms of being a buyer and a seller. So my prayer is that they continue to lower the rate. And also in the newsletter it says, however, if the Fed does cut rates more aggressively than expected, maybe mortgage rates could move lower. One economist said the market is projecting the short-term interest rate will end 2024 at close to 4%, and that's what we want. So the lower it gets, of course, the lower interest rates get, the better it is for buyers. But then, of course, you're going to have increase of price ranges of home, because that means you're going to have more buyer in the market. So, of course, more sellers will be able to sell at a higher price. So we're seeing how interest rate affects how we spend when it comes to real estate. So they're predicting, hopefully by 2024, at the close of 2024, that the interest rate could be in 4%. And it says, and then be in the region of 3% in December of 2025. So starting 2025, December of 2025, if we can see 3%, that would be great. So as I said before, they are looking at future prediction to see, you know, what will happen there. So they're predicting, hopefully, if interest rate is in the 4% by the end of 2024, then in 2025, we will see 3%. Should the Fed be more or less aggressive in cutting interest rates than those implicit estimates, then the mortgage rate may move down or up respectively. So just as I said, everything depends on those factors, praise God, with inflation and unemployment rate. So we're hoping that everything is going well, so they will continue to reduce the rate. And it says, for example, if the Fed decided that it wasn't worried about a softer job market and inflation surge, so if everything goes well with the unemployment rate, it stays down, inflation rate keeps coming down, then mortgage rates could move higher again if those factors increase. And it says economists don't view this scenario as a particular probably one, but it is possible. So they're just saying that there's a possibility. Of course, there's a 50-50 chance whether unemployment goes up or whether inflation goes up. And we know if that happens, then interest rate also will go back up. Equally, if there were a deep U.S. recession, also recession plays a factor as well. The Fed might cut rates dramatically, potentially. So they're saying if there were a deep U.S. recession, and a recession means that the economy is doing bad, if the economy is not doing good, and of course the other factors as well, unemployment, praise God, and industry prices go up, then of course they are going to cut interest rate dramatically. So we are hoping and praying that everything will be in the up and up will be in our favor, that the federal government will continue to cut the interest rate. So I hope someone out there that's probably on the fence of a buyer or a seller, that this may help them. Continue to watch the market, continue asking your lenders, whoever you're working with, what's going on with the rates, etc., and keep abreast of the market, so you will, in turn have information to know what to do in your real estate needs in terms of buying or selling. And I hope something was said to encourage someone today. If you have any questions, please go ahead and leave them below. If you haven't liked or subscribed, please go ahead and do so. This is definitely an indication to me that the videos are being watched, and that it is something that you like to see. Thank you all again, and until next time, bye now.